Yes, friends. So we'll start with this question. Okay, before this, okay, we were having discussion how to remember. Correct. See, yesterday I was talking to one of the students. There was a time, okay, when I used to remember so many phone numbers. Today I only remember 3 numbers. Does that mean I don't have a capability to remember? No, I just don't practice it. See, for your information, in our brain, I don't know whether I told that, there are neurons, and each of the neuron will store one piece of information. How many neurons are there in our brain? On an average, any average person's, you may not believe, it is 8,000 crore neurons. And one neuron will store one piece of information. Like this 8,000 crore neuron, that means even though every moment I go on feeding my mind, even say assume reasonably will live for the next 60 years, still the disk space is unused. So when God has given 2 lakh TB space in the computer, I am worrying, oh, if I download this 2 MB, what's going to happen? Is my space is going to finish? Nothing, no. For even like to tell you, when I was preparing CA final in 2007, around 470 sections I have by heart memorized. Memorize means what? Just every day 10 sections. Move on to the next 10 section, revise previous section, move on to the next 10 section. Heading. Sorry? You have to know. What is the use? See, that's a very beautiful question you should ask, and I'll tell everyone what is the use of memorization. See, your brain, you are very creative. Humans are very creative. Your brain is having so many pieces of information. When you observe something, okay, like a symptom, a doctor will observe a symptom. Since he has already memorized, okay, this symptom means this connection, instantly that person can take decisions. Alternatively, you say, oh, this symptom, no, wait, I will go and check the manual and come back. It will not make you creative. Now, it is your choice. Do you want to become creative? Do you want to be very powerful in decision making? Then decisions has to happen instantly, and mind works so fast like a supercomputer. You see, I am speaking to you. You are understanding instantly. Now understand the process behind it. The process behind it is whatever words it comes to your ears. Your ear doesn't understand. Ear will take to the brain. Brain doesn't understand. It will send you to the data storage and ask, okay, what is this sound? What is the meaning of the sound? Then one of the neuron will say, oh, this means this. And such a fast processing is happening in your brain. And if you don't memorize, like I am speaking in English language, how much difficulty you will face in understanding? Say, suppose if I speak in Chinese language, do you understand? No, why? Your brain doesn't have a neuron. It doesn't have any connections. And if you don't understand it fast the way I speak, then you understand, no? Then every word I say, sir, please wait, no? I will interpret it. I will take the dictionary and find the meaning, and then your learning is going to become very slow and difficult. The moment you start memorizing, which you are very good at, that is our business from our childhood. We have to, and it is said, students, for a kid, no, as much information you feed them at up to certain age, as much information, whether relevant, not relevant, just feed that kid with as much information as possible, because later part of the life, this all the information what you store, it will start interacting in your mind in a very beautiful manner. And you are missing this golden opportunity to feed your brain with the information what may be required in the future. And you don't know in which form, which way it is going to help you, in which way you may need it. Life is uncertain. So, see, if I was there in your position, I had done that. I would have drank every book there. Memorization would have been my top priority. But there are two different memorization. In 10th also I memorized. I told this example, I think. In 10th, I shifted from Kannada medium to English medium from 8th. So I was not understanding only anything. everything up to Lambakona, Gunakara, Bhagakara, that was the language till 7th. Suddenly you come right angle, left angle, 90 degree. Who will grasp that? Who will understand it? Because where is my data? My ABCD I started learning in 5th only. How? It's not easy, no, that communication. So, okay, first 2 years enjoying, I don't know what I was studying. 10th I became very serious. I thought I should study. Then what I should do? I should go, study means what? I don't know. So sit and memorize. Sit and memorize. So there was one question, how sun is born, of 4 pages. How star is born. How star is born, 4 pages, I remember. Every day one para memorization. Next day come, memorize the para. Next day come, memorize the para. Like end to end 4 pages I had memorized. You ask me any question, okay, how star is born, within 5 minutes I will write it. Some teacher used to ask the question in the class one day, and I raised my hand and I told the answer. Then some people were laughing and say Gilipata something. I didn't understood. I thought that's the way to learn. There is no guidance, no? Like I didn't know how to, what is that understanding, but that is not useful. Anyhow, that's one information that gave me a skill to memorize actually. See, if you ask me, I don't know anything about that. But what it helped me, memorization, it gave me an ability in future to memorize. That gave me a foundation, starting point. From PUC onwards, my father is a professor, he helped me to understand. So from then onwards, I used to memorize with understanding. I used to know what I was doing. 10th, I didn't know. See, I cleared 82% in the 10th. Great achievement? No. It is a memorization, no? Now, can I come that strategy to CA? No. Because they give me, but the proportionate of that memorized question is a very low. They will set the paper in such a way. Memorization is very fundamental. Without memorization, you cannot touch the paper. But only memorization cannot help you. So, you have to memorize with the understanding. And students, that becomes your asset. Huh? Your effort, what you memorize, will not go to anyone else. And you start practicing it. Because see, there are a lot of people with the vested interest who want to sell their stuff, telling why memorization, what is memorization, ratification. But I am the very strong proposer of memorization, because if you memorize, it is you and you only going to benefit. Others are not going to benefit out of it. Take this opportunity, no, Baba. Memorize it. No, this also. What is this thing? See, if you memorize, by looking at you understand conditions, and if you don't memorize, okay, wait for the books to open and see, which is faster. Your efficiency is very faster, no? Think about the efficiency. If you remember what all the conditions for your, say, for example, revenue recognition. You just look at this, no? Your mind will start running into somewhere else, no? Now another condition it will take of intangible assets. See, yesterday we started discussing. Can you see so many inputs are coming from here, from there? And if you don't remember anything, you just watch the screen and listen to what I say. You will never participate. So please memorize, friends. Take this opportunity, and it is possible for you. Yeah? Okay. Because why it is possible? Because this is what you have been doing from your childhood. How that skill will go? That skill will never go. I see my daughter memorizing. I am very happy. Okay, I tell her, please understand what you are studying. Huh? That I will tell her. I don't go because I have to teach them. I don't have really don't have any patience. I start shouting. Then better. But I told no. See, I am a teacher. When it comes here, I have got so much patience. But for her, I have to teach how to add, minus, divisions. She will ask me certain question. Because then I realize money, I have to explain. Forex I will explain you. For her, I have to explain 1.42 paisa minus 0.25 is how much. I really don't have that patience. So I give it to my wife only. Here, because this is what I am used to. Followed, no? Followed, no, students? So, see, that skill is with you. I am again reminding you, it is not gone anywhere. You have been doing it from your childhood. And after 2 or 3 years of doing anything, you become good at it. And that's what you have reached till now. If you would have not stopped memorizing long back, you would have left school long back. Followed, no? Okay. Okay, so we'll move on to the question number 5. Venus Limited is a multinational entity that owns 3 properties. Okay, you have got a property 1, property 2, property 3. All 3 properties were purchased on 1st of April. Okay, very good, very beautiful scenario. The purchase price and the market values of the properties are given as follows. So they have given you the property 1, 2, 3. Out of these 2 are factory, 1 is let out. Purchase price, fair value, life is given all the 3. Subsequent measure, cost model, devaluation. Is this fine? Do you see anything odd here? Well, okay, it is the same class of assets. Is there any other thing do you observe? Which one? 2 are PP. Investment property. Is there any oddness there? Here also if you see there have used a revaluation model. So instantly you identify, and by this only you fix your mind that this must be one analysis. Till now they used to ask you advice, suggest and all. In analyze and advise, always remember there will be one mistake in the question. Now subsequent measure they have followed this. Property 1 and 2 are used by Venus as a factory building where they are let out for a non-related party at a market rent. The management presents all 3 properties as a PP. Okay, first mistake is this itself is the wrong. Now the company does not depreciate any of the properties on the basis that the fair values are exceeding the carrying amount. One more mistake. Now who told? God knows, somebody gave an advice. Your fair value is more, no, why you are depreciating? Makes sense if you are holding it for held for sale. Don't depreciate it, and if the fair value is more, don't impair it. And recognize the difference between purchase price and fair value in the P&L account. Required, analyze whether the policies adopted by Venus are in relation to the properties, to these properties as per Ind AS. If not, advise. So you are clear now? It's a very easy question. Okay, I think this question has come for your exam. So we have to speak about these 5 elements. Classification we need to speak, subsequent measurement, revaluation, accounting. Now what? One more thing problem happened here. One more mistake we missed to discuss. The company does not depreciate fair values, and the difference between the purchase price, cost and fair value is transferred to P&L. Is it correct? I should have gone to OCA, no? And the presentation of the item is different. So first you start with the classification. Since they said analyze, your analysis starts with what your, they said in accordance with the Ind AS. So what your Ind AS is going to speak about classification. What is PP? PP is the one which is held for use in the production or supply. Investment property is the one which is held for rental or capital appreciation. So the first thing, what they have done, they have classified all the 3 into PP, which is wrong. Now there are 2 ways of presentation. One, you will tell this classification, straight away there only tell in the given case this is the one, this is the mistake. Alternatively, you mention all the thing and then you start with the answer. Measurement, how do you do? Cost model or revaluation model under 16, only cost model shall be done, and you should, entire class shall be revalued. One more mistake there. They could have done either both cost or both revaluation. One of the, no, but when you talk about a factory, whether in America, whether in US, India, factory is factory, no? What is the nature and what is the purpose of them? If you have got one office and factory, they are considered to be different. Again, it goes with the judgment. You have to go deeper into what type of factory it is, okay, what they are involved into, that you may verify. Now, as per 40, you can adopt only cost one. Now, entity shall disclose the fair value. That is also they have told. Now, what about the changes in the revaluation? If there is any revaluation change, it should go to OCI as a revaluation surplus. Can it go to P&L account? Now, in case previously you would have charged, recognized previously in the P&L account downward revaluation, to that extent you can reverse in the P&L. Depreciation. Can you stop depreciation? PP you are using, can you stop depreciation? Unless what? No, it's not. I am not holding it for sale, but I will stop depreciation. Yes, there is one situation possible. Is there? Use it a purpose. No, personal use means out of my, I am using in one PP for business purpose. Okay, I am not holding it for sale, but I will stop depreciation. When? Carrying amount 0 means no depreciation only. But my carrying amount is there, but I don't depreciate it. No, land no depreciation only. Okay, only one thing. How do you calculate depreciation? Cost minus scrap by life. Your scrap can be more than the cost. If the scrap value can be more than your book value, you can stop. No? What you are going to realize at the end is more than this. That's what standard Ind AS 16 says. Estimated. Okay, the depreciation. Yeah, you have to estimate it. And if the see simply you say that no sir, my scrap is more. Will the auditor leave you? That person will call one. Does he understand? No. Auditor will call one expert there. Then expert is going to tell. Followed, no? So all fittings, all setup is done. Yeah, we can stop depreciation. Only, we can stop. Ind AS 16 says the depreciation is recognized even the fair value exceeds carry value as long as the residual value is not less than the carrying amount. Because you remember every time we re-estimate the residual amount, no? So if the residual amount is more, obviously you can stop. But that estimate cannot be a weird estimate, it should be a proper estimate. Okay. The presentation of the items, okay, new learning, no? No, but that's you understand the logic of depreciation, no? Cost minus scrap by life, right? Ind AS 1 requires the balance sheet shall include property separately, investment property separately. You cannot show under one group. Okay, now comes the application. So all the three are presented as PP. Different accounting policies have applied for 1 and 2. Revaluation method, revaluation is charged to P&L account. Revaluation model has been applied to property, plant and equipment. This is not correct. Thus, this is your analysis. To analyze, you have to refer the quote, refer the provisions now. What exactly is the problem? How it is relevant in this case? Then you start telling what you should do. You apply the same accounting policy for the entire class. Like when it comes to 1 or 2, which one should I choose? Property 1 and 2, what should I choose? Both you cost or both revaluation. It also required to depreciate now, which they stopped. With the cumulative depreciation, I don't know when they stop. Revaluation gain should be transferred to the OCI, and that too you have to keep it in the separate head called revaluation surplus. Property 3, you have to use only cost model because this is the advice part, and you have to disclose the fair value in the financial statements. Also, the property 3 shall be separately presented. You remember land was reclassified. It was to be separately presented in the face of the balance sheet. As per the provision of rectified financial statement, Ind AS 1 1640, the presentation of these three properties will be as below. Case 1. Okay, there is also, you have to present now. Because advice means they will ask you, or maybe in the exam they will ask you, how my balance sheet will look like. In that, for 1 and 2, if you follow cost model, how your balance sheet will look like? Because they have given you numbers, no? Numbers were wrong. So look at the question there. Your non-assets, non-current assets, PP, what is your property 1? 15,000 minus 1,500 is the depreciation because 10-year life. Investment property 3, in bracket you have to write fair value being so and so because you need a disclosure, or you can write in the notes to accounts also. We have learnt about that disclosure, fair value disclosures, international standard committee and all we have written now. And the cost is 12,000 minus this. This will be my presentation. What if we would have followed fair value? Can you tell me, students? If my balance sheet would have looked like this if it have followed cost model. Can you tell me how my balance sheet would have looked like if we would have followed fair valuation model? Can you tell me the numbers? 16,000, 11,000, depreciation. Depreciation will come from when? Next year onwards, no? But after charging current year depreciation, you have revalued, no, Dhanashree? This is when, first of all, look at the dates, no? They have acquired on 1st of April, all the 3 properties were purchased, and 31st March 2012 is your revaluation. First you need to charge the depreciation because that year it has been used, no? And see, from 1st of, okay, the flow goes like this. When did you acquire? 1/4/2011. Now you are in 31st March 2013. Have you used this for 1 year? Then depreciation has to be recognized. Depreciation will be recognized on which value? Opening value or closing value? Opening value divided minus scrap divided by life. You would have charged depreciation. You call it accumulated depreciation because it will get loaded to the accumulated depreciation. Now you do revaluation. When you do revaluation, you have got 2 approaches. Depreciation elimination approach. In depreciation elimination approach, whatever accumulated depreciation has been calculated, you reverse it. And the moment you reverse it, and at what value you will state? At the revalued amount. So when you said me under revaluation model, we will show 16,000 and 11,000. In fact, you suggested me a depreciation elimination approach. If it was not depreciation elimination approach, what would have been the value? How my balance sheet would have looked like? Again, we don't need in exam, we are not doing that. That assumption means, then one more scenario comes. If in revaluation, 2 possibilities. First of all, we are looking 2 possibilities. How if cost is followed, how is revaluation is followed. And in revaluation, there are 2 ways of presentation. Depreciation elimination, gross asset restatement. If it would have been a restatement method, how it would have been looked like? Then say for example property 1, first of all you would have seen what is the percentage of revaluation. What was your cost? 15,000, no? Into say for example 1.15. You would have increased this value minus that first year depreciation what you charged, no? That also you would have restated. Minus accumulated depreciation. In this question you didn't see accumulated depreciation. What does that mean? Your assumption under revaluation model they have adopted. But if you have to prepare P&L extract, you will see one element of depreciation there. On what value it is calculated? On the opening cost. Next year 2013 I have to prepare this. Depreciation comes on what value? On this 16,000. Are you clear? Perfect. Okay, so but investment properties will remain same because it is not subject to an revaluation. Followed, no? So please discuss, raise the doubt, and since it is a revaluation approach, on the liability side you see revaluation reserve, which is an OCI item. Clear, no? Did they Are they expecting P&L extract? No. So you will write one note, the revaluation reserve will be routed through, but it is not reclassified. That means the day you sell this asset, it will be transferred to the retained earnings. Are you clear? Yes. Now this question came in your MT. Was it an exam question, this one? No, question 6 was, or 7 was exam, right? See now, see they have asked you this question in exam. Why? And how many marks? 16 marks, no? 10 marks. Now if you see, it's a full theoretical question only. Now why they have asked you this question? Because this question was in your test your knowledge. Then came MTP. Just keep your test your knowledge and MTP side by side. Read the same question, read the solution. In one, they have done all provisions, application, conclusion. In MTP, provision, application, so that advise and analyze and advise has been mixed. Means it's the same question, everything is same, but if you look at both, no, you see a total different thing. Now those questions are high priority questions. Followed, no? That's why you see that in the exam, because how do you remember it? How do you, because the moment you see another pattern in another format, your this thing, understanding or what you remember will change unless you sit and practice there. And that's the strategy. Followed, no? Anyhow, see, you read this, we'll quickly move. It's the same question. They have got a purchase price, and now we are very clear, no? When it was purchased, which year depreciation, which model we followed, useful life was there, same. 1 and 2 are being used, does not depreciate. Evaluate whether the accounting policies are adopted by A in relation to property. What do you mean by evaluate? Your answer sheets are what? Analyzed or evaluated? What do you mean by that? See, when you say evaluation, you have got one benchmark. Like every evaluator is given one model key, suggested answer. Their job is just to see, is this as per this? So analyze and evaluate, you can say. In analyze, you don't have any model answer with you. Simply one paper is given to you and say, please read this and analyze and give the opinion. Then you read it, try to look your component. In evaluation, they just look for this versus this. Follow? No, that is the evaluation. So here again, it is the same on the accounting aspects. If not, advise the correct treatment. Okay, I'll move quickly. So first you start about the classification, which we discussed. This is the pattern. That's the reason I kept it, to show you that you will definitely, after my classes, definitely you will come across some RTPs, MTPs, this type of strategies you will find, where there is a mixture. And do one thing, if you come across like this, no, take both, draft your own answers, keep it ready for exam. Followed, no? Because it is definitely not possible for you to last one day you see this and that. Chances are that you are getting confused more. Best thing is you take both, prepare your own answer, keep this in mind, and because that is a high probability question. So this analysis is mixed here, so this is not correct, which we told as a together thing. Followed? Then we will go to the measurement of the asset. It should have been measured cost model, revaluation model in the given case, and they should disclose for the investment property in the given case. These classifications are wrong, these measurements are wrong. Then they move on to the third, changes on account of revaluation, so and so, so and so, so and so. In the given case, this should have gone to so and so. Treatment of depreciation should have been done as per this, but in the given case they have stopped depreciation, which is wrong. Rectified financial statement should be like this, and then this comes the same. So luckily they didn't follow the, what is that called, depreciation gross restatement approach. Then totally two different, same question, two different balance sheet, but you understand now. So this would have been the value, and if you would have followed the revaluation model, your revalued values will be so and so, and your liability will, equity and liability would have been so and so. Yeah, depreciation doubt is going to come to you, but P&L extract they didn't give. Clear? Next, They asked you this in the exam. Let us see. What do you think? Twist or same? Twist will be there. Okay, let us see. Special Limited is a multinational company owning 3 property. All they were purchased on 1st April. Same. Purchase price they have given you. Only thing is there 10, 10, 10. Here 10, 15, 15. I don't say it is a twist. There is a change in the numbers. Fair values also given, which is already more in all the 3 cases. Same. They are using it for the business purpose. And the company is exploring opportunity to sell 3. Okay, there in the bracket they have written let out this, that and all. Here they have used a different language. Till the time it could not be sold, they rented it, the property. It has adopted revaluation model. Depreciation is charged on SLM basis. Company has not charged any of depreciation on 1 and 3. For the current year, since the fair value, here it was fair value is less. 1 property here. I think in the previous question, all the 3 properties fair values were more, no? All were more. 1 they twisted. They said that I didn't charge only on 1. See, this is that they do. 1st and 3rd, I didn't charge the depreciation. The difference is recognized in the P&L account. The properties are shown under the head of PP. So, all many things, what all problems were there, was here also. They used 2 different verbs there. One place they used evaluate, one place they analyze. But ultimately in the exam they used analyze and advise. And one more thing, which was not there, absolutely not there in the question. Where is the balance sheet extract? We have done, but have they told you? Simply, then P&L extract also you should have done. Why you didn't do the P&L extract? Now comes the beautiful clarity in the examination to check whether have you observed inconsistency between a question and answer in the study material. And they say present an extract of the balance sheet. Now it looks simple, friends, because we have understood. But if you see these 2 things independently, no, then you would have really found, and see the language also there. They would have given a para number. Then you start thinking, should I write para? Not required. Don't write, I am telling you. Okay, just check somebody's suggested answers. They don't expect. Some places if you can write, well and good. If you can remember, practice para numbers. But difficult, at least for some paras, very important places, exceptions you remember, you quote it. Okay, so I can proceed here. Now suggested answer, they have prepared one working note. They have told you revaluation surplus. Anyhow, this revaluation surplus night at the last part also I need to present it. Yes, then they started with the property 1 and 2. So you see the answer, they shall apply 16. Accounting increased revaluation should go to revaluation surplus. Property 3, here they property wise they started to explain. Ind AS 40 investment property is held for rental purpose, therefore you should have investment property, follow the cost model, adopt cost model. Did you see the pattern of answering the suggested answer? Here they started to explain property wise. Their provision, application. Another place is all provision, application. So analysis presented, one analysis they have given is neither correct nor as per 1 and 1640. So accordingly depreciate like this, revaluation like this. You learn the pattern now, and you see which pattern is comfortable for you among the 3. Take it and practice that pattern correctly. And there is no change. So your balance sheet extract they were asked, and here also if you see they have followed the depreciation elimination approach only. Okay, anyhow, this is the cost model. Did they say, 1 minute, why it was prepared only for revaluation model? Okay, anyhow, you would have prepared now. They have prepared given a balance sheet extract only for revaluation model here. What they have told? Second, the company uses property 1 and 2 business company has rented a property that has adopted reversion. Yeah. Did you see the question there? Shasha. Very nice, huh? Okay, 1 minute. I didn't observe. Yes, students. Yeah, very good observation. Even see one sentence. So what they do in the suggested answer, it was not half there. They said very specifically that it has adopted revaluation model for subsequent measurement of the properties. That means I cannot go and explain that if the cost model was followed, my balance sheet would have looked like this. So clear now? Means it's going to save your time also. Yes. So with this we have understood. Okay, one more time it came in the exam. Stars is a multinational entity. Okay, there should be some difference then. This is the first time question. Okay, second time question they twisted that. So first time question was as per that old our study material only, where I think we have to speak both the thing. Now property details of the market, all the things is a 10-mark question. Cost revaluation. Company does not depreciate any of the properties on the basis of the fair value. Evaluate. Okay, it's the same MTP question repetition. Whether accounting policies are correct. If not, advise the correct with the treatment. So this is an MTP question. Okay, here the question is very silent, but maybe probably by looking at the answer like marks, we may have to write. Okay, so here they went with the MTP type of presentation. Okay, I'll proceed further. Okay, all these things we have discussed. See why I gave these 4, so that to show you that difference, how it comes in the study material, how they will ask in the exam, how they will ask in the MTP. This one problem was sufficient for us to understand. So be careful in your attempt what they are going to ask you. Yes, so here since the clarity was not there which they are going to follow, we did both. So in your attempt also, if there is no clarity, you may have to do both the way. If they tell you one particular model is followed, prepare only balance sheet extract as per that. Now on 1st of January 2012, what happened? Sun was notified that the customer was taking legal action against company for financial losses incurred by the customer. One notice came, lawyer notice, on 1st of January. Now the customer told that, look, whatever I am suffering, it is because of your faulty product, which is used last year, 30th September. You have produced that and gave to me. Now Sun Limited defended the case, but they considered based on the progress of the case up to 31st March 2012 that there is a 75% chance that I may have to pay a damage of 10 lakhs. What you should do? Provision, because see, it says that there are some percentages given. If it is more likely than not, that means more than 50%. Equally likely, 50-50. Less likely, then it is a contingent liability. If it is more likely than not, that means you have to make a provision. But when it comes to contingent assets, contingent assets can be recognized only if 95% surety is there, when it is virtually certain. That means above 50% up to 95% it is contingent asset. Afterwards, liability, no, we are conservative. Okay, at this point of time, I want to just discuss Ind AS 34. You asked me certain doubts. Deferment at the end of the year. Okay, I was just thinking when we will discuss that, we can discuss at this point of time. 34, interim reporting, there was one expense, no? They said that income you cannot anticipate if it is seasonal and all. But if it was an expense, you can defer it. What is the logic there? At the end of the year, if you do it, okay, so the logic is here, students. Now, you can't anticipate revenue or yeah, you cannot anticipate the revenues. Follow, no? Or you cannot defer the revenue also. Or deferring the revenue can be done if you think that the benefits are going to come in the future. Anticipation of the revenue cannot be done, that I am going to earn the revenue, because we are fundamentally following conservative. But if you have incurred expenditure right now you believe that this expenditure is subsequently matching with the revenue. Like example, 31st March only you incurred one advertisement cost. Will you charge to P&L account or will you defer it? On 31st March, you have paid one advertisement charge. On 1st of April, one product is going to get launched. Now, on 31st March, you incurred that advertisement. To bank account, debit what? Advertisement, but will you charge to P&L account? That is P&L. But your benefits are all going to come from the next, it's specifically related. No, again, it goes with the more judgment. But when you talk about the expense, you can defer some of the expenses for the subsequent portion. That's what. If you can do it at the end of the year, you can do it during mid of the year. If you are evenly incurring, then there is no question. But if certain things are unevenly incurred, and you believe that it is matching with the revenue of some other period, you may take deferment of that expenditures. No, again we have to apply our mind. I'm just telling you one example. Okay, logically maybe, because my all incomes are going to come on the next day, no? Okay, so if a specific comes like goodwill impact, recognition of the goodwill, internal generated goodwill cannot be recognized. If they tell specifically, there is nothing. Otherwise, what happens? It goes with the judgment. What type of expenses can be deferred, what cannot be deferred. So the logic of what they are trying to tell, if certain things are uneven, and you could have deferred at the end of the year, like for example, discount on employee loan. You have given an employee loan now. It's the cost. Out of pocket, gone, lost to you. Will you charge to P&L account right now? Yeah, you have given that employee, you would have given somebody 10% interest. You give employee 2% interest loan. Now this becomes a discount on employee loan. It is a loss to you. Now, does it make sense to you? You are given on 31st March loan. It's but if you look at the present value, if you look at the whatever inputs, L1, L2 inputs, you have made a loss now. Can you defer? Why? You are getting benefits in the future, no? So I cannot use one measure, like one this thing to tell, look, there is no one standard to apply that. It goes with the situation. So what does that interim reporting says? If you could have deferred at the end of the year, this particular expense, like for example, on 31st December, I incurred this employee benefit cost. Whether 31st December or 31st March, you would have deferred. Then same logic you apply here. Say for example, our example, advertisement cost, and say one of the standard prohibits, you cannot defer, you have to charge right now. So standard only telling me, so which I can't do on 31st March, I can't do on 31st December. And generally this becomes applicable for uneven expenses. Even expenses, we know that there is a question of deferment. It is a very clean, straightforward. Followed, no? No, revenue deferment, again, it goes with the judge. I cannot tell you. We have to look into the substance of, like what type of item it is, what does my law says, what does my standard says, what does taxation says. And that all understanding, see here, we are learning theoretically limited way, okay, which is not really the, what happens, the extension of this happens in your practical life. There you have got a lot of people to take opinion. You will go to your senior partner comes, you can ask ICI, and that is your full-time job, no? That's one aspect you will spend considerable time. Here we cannot spend that much of time. Okay, so this part is clear, 75% probability you have to make a provision. However, the accountant of Sun has not recorded. Now you understand it is analyzed and advised. This mistake you find, you don't look into the verbs. Mistakes you find means you have to mention the provision, you have to tell what is advice will be there somewhere. Mistakes means in the financial statement which is not yet settled, in case not has not recorded the transaction. The case was ultimately settled against the company and had to pay damage on 15th May and financials have been authorized on 18th May. One more subsequent event also occurred. Now two mistakes. What is that? First of all, you didn't make a provision. And second, did you recognize subsequent event? No. How much you should have made? Provision you should make ultimately. How much? 10 or 12? 12. Followed, no? So for to answer this, you have to talk about both Ind AS 37 also, Ind AS 10 also. Then you have to tell, look, in the given case, this is the thing. Yeah, you, because see, when, that's what I am telling you, because examine, evaluate, analyze. No, see what you are trying to, in all the things, okay, your question analyze, evaluate, examine. What you are trying to find out are the components. How many issues are there? In examine also, I told you the example of a goldsmith. He will try to find out the impurities, like how much portion of this, what is there, is copper mixed there. So that is examination. Like institutes examine you in 6 papers. Each paper they will ask you on a sample basis one of the question. They are trying to examine you, your understanding about different things, not one thing. Analyze is also different portions, like doctor will analyze your sugar, this, that, and they will evaluate it. To evaluate, you should examine, no? Yeah, presentation wise, what you should understand and look for the marks, that's very important. You have to look for components, first thing. And if they ask you advice, then you have to, I can say for advice, you may have to quote the provisions, because simply you cannot advise, no? If somebody comes, what should I do? Then you should say, institute has told like this, institute has come up with this, that's why better you do CA. No, MBA, that means you have to quote some authority there. That's what, no, see, when you find analyze advice, no, it's almost same, followed, no? And again, you will understand, no, these questions you see, look at the marks. That's what I tell, because I cannot, sometimes they may give you for 4 marks. Then what is the fun in writing all those things? You doubt, keep it later, do it later. Even though you know it very well, don't touch this. Because we have seen that 10 mark question is asked for 5 marks. Paper will be, and then you say, oh, I could not find the time only. Or if you write all the story here for 4 marks, how you will get sufficient time? Do it later. If you find, right, otherwise you take a shortcut. So assume expected method, value method has been followed. Okay, there is one more thing. There is a 75% chance, and in the solution they went for expected value method. No, alternatively you could have gone with the 2 outcomes, no, yes or no, and 75% chance is yes. Most likely method also you could have gone. But somebody sees this, they make us confused, like why 75% this question? Other questions they have not taken like this, they have taken full. What is the assumption there? In other questions when they have taken full, it was most likely outcome method they have used. And whenever you estimate, doesn't matter in which chapter of FR, most likely also fine, except expected value is also fine. So now you start talking about the Ind AS 37 provision. You should have a present obligation that is going to give you resources, and you can make the estimate. If these conditions are not met, you cannot make any provisions. Then doesn't matter, okay, no. Who told not okay? Means what I am trying to tell, when you look at the solution, understand the assumptions they have taken. Why? Ind AS, see, estimated value method or this thing, anybody you can use now. Have you made the provision? What he made? No, he did not record only, no. That was his mistake. Have they told you any calculation mistakes he has done? He didn't record it only. So for this you are going to tell, is that activity correct? No. You need not make the provision, you need not record it, means you can show it as a contingent liability if this condition would not have fulfilled. Further, the amount to be recognized will be the best estimate of the expenditure. You should make a best estimate. Now coming to Ind AS 10, it says that events after the recurring period up to the financial statements are approved are the events after the recurring period. Then you suggest that there are two types of events called adjusting event or a non-adjusting event, where you should have made the provision. Yes, in the given case, it is an adjusting or non-adjusting. It is an adjusting event because your conclusion happened, 12 lakhs you had to pay. And on the date of the balance sheet, there was one condition, means uncertainty existing. An entity shall adjust the amounts. Now, in the given case, you have not recognized the provision only, which is not correct as per Ind AS 37 also, Ind AS 10 also. Okay, what is your advice now? Thus, as per this, you have to make a provision by making reliable estimate. Therefore, provision of Ind AS 37, you should have made a provision of 7.5 lakhs, assuming most likely expected value method is being used. Now, at this point of time, students will get confused. But you have to understand the underlying assumption. Not a problem. Some students would have told make a provision for 10 lakhs. And they both have seen, and that is an adjusting event. Therefore, the amount of provision to be increased to 12 lakhs. Now, should I make into 75% of 12 lakhs? No, why? It has become confirmed, so it is into 100%. I don't know. Then now you will find a problem. Why I took 75% of this? Because they didn't tell you the assumption there. Perfect, no? Okay. Then it's like puzzle, Baba. You will enjoy it, solving it, no? And they will give you one day puzzle, solve this. Since you know the rules of the game, then you will be able to solve it. Just understand them enough. So, government grant regarding agriculture we have done. If it is, okay, this part is question clear, no? That question has not yet come. Biological assets, if it is given at a fair value, Ind AS 41, and other two cases, bearer plants or assets at cost, it is a Ind AS 20. When you cannot measure the fair value, then you will measure at a, like for example, one unique type of animal has been purchased. You don't know the fair value of it. Like for example, something, you purchased one snake with 3 heads, never seen, correct, no? And from that day you can, it's nice, no? Now, what is the fair value of this? You don't know the market parts, okay, you will try to figure out, but then you will, whatever cost you would have paid, you would have recognized it, if you cannot figure out the fair value. Okay, so this is the logic we discussed. Yes, now take out this question number 10. Mercury is engaged in the plantation and farming on a large scale of diversified across India. Now, on 1st of April, the company received a grant of rupees 10 lakhs, subject to a condition that it is going to engage in the plantation of eucalyptus tree for a coming period of 5 years. Now, first question comes, what is this eucalyptus tree? Huh? Nilgiri, okay, it is a bearer plant or an agricultural produce? Don't forget that. Don't read it, because see, Baba, in exam I'll show you now what they will do. I think this question has come, no? Exam? Is a bearer plant? It's not a bearer plant. Why? Because it itself is produced as, sold as a, harvested as an agricultural produce. I don't know whether tree or you take the leaf, sell the tree, and maybe you may be selling. I don't know. They have assumed eucalyptus trees are not considered as a bearer plant in this tree. This Nilgiri eucalyptus. I don't know. They said it is not a bearer plan. No, Baba. I'll you see our institute. First, very importantly, I told you when you don't understand something, please go into the Google, understand what that tree is all about. Don't just leave this. Okay? What they will tell you, don't go with that. First, you understand what really it is. Because you may in an examination, you may have to take certain assumptions there. Now, the management has got an assurance that the entity will comply with the conditions of the plantation for a specified period of 5 years and accordingly recognize proportionate of 2 lakhs into P&L account. Analyze whether as per Ind AS 20. Now, analyze whether this treatment is correct and advise the correct treatment. Conditions are complied with. Okay, so is this Ind AS 20 applicable? No, Ind AS 41 would have been applicable. By reason, it is not a bearer plan. Followed, no? Very good. So you have got that clarity. They have given, no, see, they have given, then don't make any assumption. Huh? We'll come, we'll discuss that. What if they have not given? Followed, no? Or what form they may give? Let us discuss. They have not told you whether trees are at cost or fair value. Keep that in mind. Now, provisions, you start with the government grant, Ind AS 41, what does it say? It is the conditions are met, so and so, so and so. Now, however, the terms allow the part to be retained, then you can recognize it. But have the government told you that if you do it for 2 years, you can recognize? Question is very silent, so what you will assume? Unless they tell you specifically, no. You cannot assume that, okay, terms and condition must be having. In the given case, it is a conditional government grant for 5 years. It is for agricultural activity. Assume that your eucalyptus tree has measured at a fair value, because that's why you treat it as an agriculture, because if it was at a cost, even though it is not a bearer plant, your Ind AS 20 would have got applied. Then what they would have done was correct. Eucalyptus trees are not bearer plants, and the provision would be applicable. This is your application. Thus, what is your advice? What they said is not correct. As per 41, they should have kept it as a deferred grant only when the conditions. So, the next 5 years, keep it as one deferred income in your balance sheet. And the 5th year, when it is become fully receivable, pass deferred income account debit to income. Perfect? Sorry? That means it will be shown as, now they asked you prepare an extract of the balance sheet. Means in the solution they asked you. Question is silent. However, the terms allow. What if the terms are going to allow? Because question was silent, no. They said if the term was allowed, then what they did was right. They recognized 2 lakh. That activity was correct. So everything goes with the terms and conditions. So I hope with this question, you have understood the assumptions they have taken in the solution, why it is applicable, whom it is applicable. Okay. So extract also they have given. As on 31st March, it will be 10 lakh as a government grant under non-current liability. It will remain so as a non-current liability for how many years? 4 years. And the 5th year, it will get turned into current liability. Because it will be realized, no? Next year. Yes. They said that if the alternatively, if you could have recognized 2 lakhs, if the government permits you, every year, 1 year passes, you can recognize proportionately. See, bearer means 20. Their realization and all not important. There is only 2 conditions. You should have the reasonable assurance to receive it, and you should have fulfilled the condition. Means systematic basis and all, you start recognizing. Here the condition, if it is an agriculture condition, has to be met. If it is unconditional, I should have received it. Means it should be very sure that I am going to receive it. Clear, no, Aditya? 5th year I will recognize. Once my full 5 years is complete, that year I will pass deferred income account debit to income. So balance sheet extract is also done. Now we will see in examination when they have given you. Let us see the examination question. Arun Limited is an entity engaged in the plantation, and before that, has it come anywhere else, that question? This is the exam. No, before that question, only one test your knowledge question. No RTP, MTP, no? Okay. Now Arun, and see, when you somebody is solving this question, understand they must have seen that test your knowledge question. They must have seen, no? Reasonably, anybody will assume that you must have read the study material question. Arun is in entity engaged in the plantation of large scale diversified, same story. 1st April they received a grant of 20 lakh rupees, subject to a condition that it will continue eucalyptus tree for next 5 years. Did you see here? One sentence is missing. In exam, the management has got a reasonable assurance that the entity is going to comply with the conditions for 5 years. Accordingly, they recognized proportionate 4 lakh in the P&L account. Accounting of the government grant required evaluate whether the accounting treatment is correct, and if not correct, please advise. What is your advice? What is your evaluation? Will you say that it is assumed that eucalyptus tree is a bearer plant? Income following principles of Ind AS 20. They have assumed it to Ind AS 20. They said, look, they recognized 4 lakh, telling that this eucalyptus tree is covered, or this grant is covered by Ind AS 20. So what is the assumption of the management? It must be a bearer plant. Now, what is your opinion? What is your answer in the exam? So that's what, no? This is what they do. And if you start wondering, first of all, you need to have that clarity. What exactly it is, what they see. If you say what they have done is correct, then you should give the exemptions there. Was it correct? If it was a bearer plant, then your Ind AS 20 would have applicable to you. Then it might have been correct. But if you consider it is not a bearer plant, or if you say that it is an eucalyptus tree, it is not a bearer plant, it is an what is it called, biological asset at the fair value, then it is totally wrong. It is only biological asset at fair value will attract Ind AS 41. Sorry? Okay, what you should consider? In exam also you got same confusion. What you will do? What you do in the study material, just write that. Question is very silent here. So you give alternative answer. If they would have taken as a bearer plant, then what they would have done is correct. Have you seen that suggested answer? And now why they 4 lakh? Because how much they received? 20 lakh, no? For 5 years. So they have taken 1 year finished. 1 year 4 lakh they have recognized. But see, if they have given you an unknown tree, what is the probability? 5%. What is the probability they would have given you eucalyptus tree? 95%. If you want, I will increase to 10%, but don't tell me that 90% chance that they will give me some other tree. Yeah, they may give you because they are unpredictable, but not other question would have been easier there. This question would have been 1B, compulsory question. Oh, you write both the alternate. No, question is silent. No. Then take one stand. No. Why you want to spend time? Why you are spending time there? That's my only one question. Oh, that's what they told at the beginning. Take your assumptions. Don't write your assumptions. And you, without writing, if you take any stand, you are actually taking not a stand. You are taking a risk there. It is left to the grace of that person. At that mind, what has been told to him. If you are taking, then you are assuring yourself the possibilities are very high. See, understand, ultimately we live with the probability only here. We don't live with certainty, even in our personal life also. We live with the probability. So try to make the probability of you scoring high, very high, by understanding rule. Like by understanding the traffic rules and following the traffic rules, the probability or you are alive is very high, no? If you don't understand the traffic rules, no, I don't say, you have seen in movie, somebody close the eyes and cross the roads. Do we say that that person is going to die? No. But the probability of death is very high there when the rules are not understood. Rule is when the green signal comes, then only cross the road. Okay. So now understood, but you are very clear about the provision. Nobody should shake you. So you first explain the provisions. Okay. So however the terms should be allowed. If you want, take your assumptions measured at a fair value. So that to explain, because you remember in the study material, they said very specifically. A real problem comes when the bearer plant, which standard is applicable, if students are highly confused at that point. At the cost, at the fair value, at bearer plant, if that confusion is very clear to you, then you can very well answer with any assumptions. Okay, so in the given case, their activities are not correct because you have assumed it to be a bearer plant. So you have to wait for the condition to meet. So however, if alternatively, if you assume it to be this thing, they are correct. Okay, this is an alternative answer, where they give suggested answer. Alternatively, if you assume that it is measured at a biological at the cost, or it is a bearer plant, then it is a conditional grant as per Ind AS 20. So on a systematic basis, you could have recognized. Which one? They not everywhere. This is here they have given. Don't expect that they will give you everywhere. Somewhere they have to keep you in dark also. It's an assumption. It depends upon which assumption student has taken in the exam hall. They didn't permit that assumption there, but in the solution they told that assumption. You can recognize, and what they did was correct. There is nothing to advise them. Clear? Yes, next question. Now we have come to your favorite zone. And now again, you have to work out and tell me all these things. Now I don't want to discuss any theory anymore. XYZ issued 4,84% redeemable preference shares on 1st of April 2015 at the par. Now interest is paid annually in years. The first payment of the interest amounting to 19,200 was made on 31st March 2016 and is debited directly to the retained earning by the accountant. Why? Why? You know the simple reason? Simple reason is that accountant has not studied Ind AS. And what has been taught to him? Preference shares means capital. But the rules have got changed now. It would have been capital provided, but the problem is it is redeemable. How it can be a capital? It is a financial liability. The preference shares are redeemed for cash for 7,20,000 on 31st March. EIR is 18% per annum. The proceeds of the issue have been recorded within equity by the accountant, have been recorded within the equity by accountant, as this reflects the legal nature of the shares. What did you understood with this? Please tell me. Sorry? Okay. Yes, classified as an equity, the principal portion. The board of directors intends to issue new equity shares over next 2 years to build up their cash reserves to redeem the preference shares. Now Mukesh, accounts manager of XYZ, has been told to review the accounting of the issue. He said, look Baba, we are going to public and all. We should not be a sorry face there in front of them. Suddenly somebody will come and ask me debt equity ratio and say you are the manipulator here. Enough, no, for us, then nobody is going to trust us in the market. So our accounting has to be up to date, perfect. So CFO asked Mukesh the closing balance of the preference shares at the end of the year. Now if you were that Mukesh, then how much balance you would have shown to CFO on analysis of the above issue? prepare adjusting journal entries also if required, because you are like the one who have understood Ind AS. The accountant didn't know, he has passed some entries, finished with a certain set of entries. Now we are at the end of first year. CFO is asking you, newly joined management training, tell me the closing balance of this, because we have to go to the public now. Now you have to analyze this. Analyze, this is not mentioned in the RTP, but in the MTP they suggested, RTP up to here only. Solution is also given for analysis there with the theories. Now, can you tell me, students, what was that closing balance of this? Can you please pause the video, work out the closing balance of preference shares. Okay, so we'll check the answers, we'll compare the answers. Before, only one question to you, only one question. Is this, see, always that's what I say, students. First thing in the financial instrument, figure out, is this at market terms or at off market terms? That you need to have the clarity, because otherwise it might have happened a fluke there. You might have got the answer by fluke. Okay, let it happen. I wish, definitely I wish good luck for you. Even though you make mistake, that mistake might happen to be a correct answer. Tell me, it is at the market or off market? Are you confident? If you say off market, what is my off market discounting rate? 18% have they told you expectation, or they have they told you EIR? Is the meaning of EIR means can your discount rate, okay, generally discount rate or expected rate is nothing but EIR. But can it happen, and at the market instruments coupon rate is different, EIR is different? When you say, sir, either there is a transaction cost involved, you would have issued at a discount, or you would have redeemed at a premium. That's the only thing. You would have issued at a discount, redeemed at a premium, or there was a transaction cost adjustment. Otherwise, okay, if it was not the case, if it was an off market rate, your EIR would have been equal to your discount rate, provided your transaction cost would have got adjusted. Now, why it is 18%? Because you have, it is an at the market, it's not an off market instrument. They never told that similar discount preference shares were quoted at so and so rate. They never told. There was no transaction cost involved here. 4,80,000 is what you received today. 7,20,000 is what you are going to pay. So the differential between two, will you recognize as an expense on the day you pay? No, you would have adjusted to your EIR. So if this was not redeemable at a premium, you would have amortized at the rate of same 4%, and what that accountant did was correct, other than the classification problem. But since you are going to redeem at a premium, your EIR is going to increase to 18%. So this is the mistake he has done. Plus that 18% should have gone to finance cost, not your retained earnings. Perfect? Understood? Clear now? Yes. So now let us read the solution and try to find out how we need to talk about it. First, you have to speak about the classification. Now, preference shares have got a predefined amount, and redemption can be a fixed amount. They have got a right to receive. So the legal form may be an equity, but in substance it is a debt. Under 32, they are classified as a, Ind AS 32, they are classified as a financial liability. You cannot classify them as an equity, even though its legal nature may be preference shares, maybe equity, in the nature of equity. Second, initial recognition. How should you recognize? Anything at the market term should be at the transaction price. So on day one, you must have passed one accounting entry. What entry you must have passed? What is the initial recognition of this instrument? Bank to preference shares, preference share capital. How much? 4,80,000 only, because it's at market terms. You never discounted it. And even though you want to discount, use 18% and discount that 7,20,000 plus your interest. You would have got that. You would have got 4,80,000 only. You will get 4,00,000. That means your accounting entry bank to financial liability. Now the preference shares should be accounted at amortized cost using EIR at 18%, and this 18% has increased because of the redemption in the premium. Now subsequently the closing balance is 5,47,200, which is 4,80,000. You need not prepare schedule there. 1.18 minus CCF. You can prepare, doesn't matter, no. Schedule how long? One line is sufficient. No? We can just say, because other problem is with the classification and all, no. Classification problem is there, and subsequent measurement also. And one more thing, they asked you the journal entry. How much expense you should have recognized? You should have recognized 86,400. How much did he recognize? 19,200. They said rectification entry also we have to pass. This should be sufficient. Okay, you see no, how much is there. I am discussing, see, so many slides are there, so many theory. No, prepare, Baba. See, if you are in doubt, you prepare. That's what. It's a very good thing that you started to look at the marks rather than simply without ignoring marks you are doing there. No, what I am trying to tell you, if you feel that you have to prepare, my only point is how long should you prepare amortization schedule for all 5 years? 1 year, no, only 1 year you prepare, enough. So what I did here, you prepared in the form of an amortization schedule. If I was evaluator, I would have allowed that. If somebody would have prepared 1 line amortization schedule, it doesn't take much time, no. It's a 3 years. Third year, you prepare something extra not required, no, because CFO asked you at the end of the year. So are you clear? Now in the given case, they debited 19,200 to retained earnings, which is totally wrong. Instead of 86,000 should have gone. An amount of 5,47,000 should have been shown under the borrowing rather than equity 4,80,000. See how much analysis is there. See, it may be a small question, the solution may be very small, but the technicality involved here is very big. Like this amount is wrong, that amount was wrongly classified as 4,80,000. Can you just tell me one rectification entry, because they asked you, no? All these things they have told. Can you tell me one rectification entry? Yes, sure. So please pause the video and do one rectification entry. Okay, sure. So we'll check the answer. You are very clear with your entry, then don't take reverse turn. Tell me. We'll show the answer. Nah, I trust you. Your accounting entry is first you are going to reverse the wrong classification, give the correct classification. Followed? Then there is one finance cost which should have been debited to P&L account. It didn't come only. Debit that finance cost to P&L account. And what he has debited was a retained earnings debit. No. You credit to the retained earnings. It should tally. See, all these numbers are derived using these numbers only. That's why now I believe this rectification entry should carry high marks to it. Because it is tricky there. It is very catchy. So somebody should have understood like where it has went, what has classification has been done. Otherwise you will get stuck with the differential figure, what to do. It's easy, no? Clear? Now I'll show you now similar questions, because all the similar questions are plotted together. You may think, sir, if this question comes, I will write. No, we'll move on to the next question. I'll show you the level of confusions which is going to come now. First part of the question is clear. So we'll talk about the classification, you talk about the measurement, what should have been classified, what should have been measured, how much expense should have gone, so and so, and this is my rectification entry. So you told the balance and so and so. On 1st of April 2011, Pluto advanced 10 lakh rupees to its employees for interest-free loan of 4%, but the market rate was 10%. Now there is one off-market instrument, which is repayable in 5 equal installments along with the interest at the end of the year. Now employee is not required to give any specific performance against this benefit. What it is? It's not your market based. It is a service based performance. Like suppose it is not even condition based. Like there is no condition attached only. Like for example, in appreciation of your past service, I have given this loan. Then there is no amount of discount to be amortized. Entire expense would have gone to P&L account. Here, you are not required to give any specific performance, means you need not bring profit to this level to be eligible for this loan. But assume to be that you should stay with me. That is an assumption. That's why if I amortize it, I will use a straight line basis to expense it out. Followed, no? The meaning of this sentence is, you need not give any specific performance for this. That means it is not contingent. You just stay with me for next 5 years, use this loan benefit. But if at all you leave in between, I am going to recover this full with interest. So here understanding is, this is an amortized, the discount expense is an amortization which will be spread over next 5 years. So don't make any other interpretations of this in exam also, because they will use different words. I'll show you. The accountant of the company recognized the staff loan in the balance sheet equivalent to the amount paid. Interest income for the year recognized in the contractual statement rate of 10 lakh 4%. Analyze whether the above treatment is correct. That you say no. Advise the correct treatment along with the working. Again, what I want you to do in this question, which the question is very silent. Here if you see your, okay, whatever it is, I don't want to tell you anything. In this question, okay, first of all, amortization schedule is prepared for full 5 years. Then they have given you the rectification entry also. And then they have given you the balance sheet extract. How my balance sheet would have looked like at the end of the year. This is which question? Study material question or exam question? MTP study material question. Correct? Will you trust? No, because there is a very clear cut inconsistency. They say analyze and advise, but if you go to the solution, balance sheet extract is also given there. Amortization schedule is given. That means probably this may come for a big number of marks, say 14 marks, I don't know, 12 marks. Then you have to make an interpretation that, okay, previous question, that Mukesh case was a loan preference test taken, so I need not prepare. But when I give an employee loan, maybe they are expecting amortization schedule with the balance sheet extra. Followed, no? So can you do this part? Yes, students, so please pause the video. Do one thing. Since you already 109, you are aware. What you can do is, you can prepare one amortization schedule for this. You know very well it is an off-market instrument. And then you have to prepare a balance sheet at the end of the year after rectification entry, because he has made one mistake there. You know what should have been the income recognized. You know what he made a mistake. Pass one rectification entry and just show me a balance sheet at the end of the year.